So hello everyone, we'll now be introducing you to the online payment industry, summarizing all the headlines in the newspaper that India's is on its journey for digital transformation. We have taken upon this industry. In November 2016, India implemented demonetization, which led to a surge in digital payments as people sought alternative methods for doing the transactions. And instead of physical currency notes, people switched on to the digital payment methods. Government also introduced various initiatives like UPI and BHIM apps to facilitate the seamless and the instant online payments. Now, the second point which we have come up to is fintech innovation in India. India has seen a surge in fintech startups offering innovative online payment solutions. In the recent past, the fintech industry has grown exponentially. To talk about the industry overview, the online payment industry has experienced rapid growth and transformation with the emergence of various digital payment methods such as UPI in India. To provide an industry overview and value chain analysis, we will focus upon some of the key components of it. So first of all, the online payment industry encompasses a wide range of digital payment methods and services that enable individuals and businesses to make electronic transactions. So first of all, need to understand the first point, customers. Customers, the heart of online payment industry. They include individual businessmen and the government entities also that make digital payments for various purposes such as shopping, bill payments, and also fund transfers. Second, we come up to is the PSPs. What does PSP stand for? Payment Service Providers. These are the companies that facilitate online transactions between customers and merchants. They play a central role in processing payments. Example of PSPs could include banks, payment gateways, and also the fintech companies. Now we come up to the UPI and other payment protocols, which is the third component in the value chain analysis. In case of UPI, it is a specific payment protocol which is developed by the NPCI, National Payment Corporation of India. Payment protocols like UPI act as a backbone for online transactions, ensuring secure and the efficient payment transfer. Fourth, we come up to is the merchants, which are the businesses that accept digital payments for the goods and services. They integrate payment gateways for the websites or point of sale systems to enable customers to make payments. Fifth is acquiring banks. Acquiring banks work with merchants to enable to accept digital payments. They provide the necessary infrastructure and services to process payments and the settle funds. Next is issuing banks. Issuing banks, as we know, that they issue debit and the credit cards to customers, which play an important role in validating transactions initiated by the holders. Next is payment processors. These are the intermediaries that handle transaction between merchants, banks, and card holders, and to the online customers that facilitate. They are the major intermediaries. Next, we come up to the regulatory bodies. Regulatory bodies who govern the UPI system or the online payment system in India. These are the governments and some other regulatory authorities which oversee the compliances with laws and regulations and they protect consumers and promote fair competition. So now we'll go upon to discuss the key trends in online payment apps. Increased adoption of UPI payments, growing popularity of QR code. As we see that the QR code is now there in every small or the big shop. So we see that there is a growing popularity in it. The emergence of the new payment technologies such as Visa cards and the wireless payments, as we can now see that there is a very exponential rate of growth. Second, we come upon to the market share of UPI apps. There is Amazon Pay, there is GPay, there is PhonePe, there is Paytm, with Google Pay acquiring the 34% and the PhonePe acquiring the 47% in the market share of UPI. So if we want to discuss the overall value chain, it could be the inbound logistics with operations, marketing and sales and services. So to discuss about the inbound logistics, we know that there is a long-term contract with services providers like security and encryption provider. Second, we go on to the operation at how it is processed. We accept money from the respective banks, then there is the verification, we enter the PIN, and then there is a transfer of money. Then we go on to the marketing and sales. There is a pan-India presence of these QR codes which facilitate the UPI industry. Also, we can go to services, that is the email transactions, payment without internet, and also the 24/7 that it works upon. I would like to now call my another team member to take you on to the Porter's 5 forces analysis of the industry.
So let's analyze the Porter's 5 forces now and how that affects the online payment app industry. But first, let us understand what are the Porter 5 forces. Porter 5 forces is a model that identifies and analyzes 5 competitive forces that shape every industry and helps determine an industry's weaknesses and strengths. 5 force analysis is frequently used to identify an industry's structure to determine the corporate strategy for that particular industry. Porter's model can also be applied to any segment of the economy to understand the level of the competition within the industry and enhance a company's long-term profitability. Now, the Porter's 5 forces named after the Harvard Business School professor Michael Porter are as follows. First is the competition in the industry, then the potential of new entrants into the industry, then the power of suppliers, the power of customers, and last is the threat of substitute products. The Porter's five forces analysis can be applied to the online payment app industry to assess its competitive dynamics and attractiveness. And these are as follows. The threat of new entrants. The online payment app industry is highly regulated in many regions, which can create barriers to entry. Now, obtaining necessary licenses and building trust with the customers can be challenging for new entrants. But however, innovative fintech startups can still disrupt the market with unique solutions and partnerships. So because of this, the threat of new entrants for online payment app industry would be, I would say, low to moderate. Second, we would come up onto the bargaining power of the suppliers. Suppliers in this context include payment processors, technology providers, and financial institutions as well. Online payment app providers often have multiple options for these services and giving them negotiating power to secure favorable terms and ensure operational efficiency. This makes it very clear that bargaining power of suppliers would be relatively low for online payments industry. Next, we would come on to the bargaining power for the suppliers. The bargaining power of buyers. Buyers, including individual users and businesses, have multiple choices when it comes to selecting online payment apps. They can easily switch to alternatives based on fees, security, convenience, and even additional features other than that. This gives buyers significant bargaining power and would keep providers focused on delivering a better value. Thus, the bargaining power of buyers here is rather moderate to high. The next thing would be the threat of substitute products or services in this context. While online payment apps are convenient, substitutes like traditional banking services, cash, credit, or even debit cards and other digital wallets exist in today's scenario as well. The ease of switching between these options moderates the threat of substitutes. Payments apps need to continually innovate to retain users, so the threat of substitutes is moderate in this case. The intensity of competitive rivalry here is relatively high because the online payments app industry is fiercely competitive with numerous players vying for the market share. Here, the competition is based on factors such as user experience, security, transaction fees, and the ability to offer additional financial services. There are a lot of established players like PayPal, Venmo, and digital wallets from tech giants like apps, Apple, Google, and Samsung, which dominate smaller fintech startups and gain traction with unique offerings. So intensity of competitive rivalry is high for the online payment banks here. To summarize the whole Porter's five forces, the online payments app industry faces moderate to high competitive forces, while regulatory barriers and customer switching costs moderate the threat of new entrants and substitutes. The bargaining power of buyers is high. The industry's key to success lies in innovation, security, and providing exceptional value to users while managing operational costs and efficiently and effectively.
So I'll walk you through the slide. The slide that is on the screen is the Pester analysis of online payment apps. So Pester analysis is a tool which is used to identify, analyze the political, economic, social, technological, environmental, and legal factors that can impact a business or industry. So political factors may include government regulations, initiatives, and the currency exchange rates. Economic factors includes economic growth, inflation, and interest rates. Social factors may include customer behavior, consumer behavior, financial literacy, and demographics. Whereas technological factors includes technological advancements, cybersecurity, and access to technology. Environmental factors will include sustainability and climate change, whereas legal factors will include data privacy, security laws, intellectual property laws, and payment regulations. So we do a Pastel analysis to identify the key factors that could impact a business or industry, both positively and negatively. This information can be used to develop strategies to mitigate risks and capitalize on any opportunity. So talking in the context of online payment apps, the following are some key Pastel factors to consider. Political factors, government regulations can have a significant impact on the online payment industries. For example, government may introduce new regulations to protect consumer data or promote competition. Government initiatives to promote digital payments can also boost the growth of the industry. Talking about economic factors, economic growth can lead to consumer spending and demand for online payment services. However, a slowdown in the industry will have a negative impact on the industry. Social factors, consumer behavior is the key to consider an online payment apps. Providers need to understand the needs and preferences of their target customers. Financial literacy is also very important as consumers need to be aware of the risk and behaviors of using online payment apps. Technological factors like technological advancements are constantly driving innovation in the online payment industry. Providers needs to invest in new technologies to stay ahead of the competition and meet the changing needs of the customers. Cybersecurity is also a critical reason and online payment apps are vulnerable to cyber attacks, right? Environmental factors, online payment apps can contribute to environmental sustainability by reducing the use of paper and plastic. However, they also consume energy and generate electronic waste. Last, legal factors, online payment apps must comply with a variety of data privacy and security laws. They must also comply with intellectual property laws and payment regulations. So by conducting a pestle analysis, online payment apps providers can gain a better understanding of the external factors that could impact their business. This information can be used to develop strategy to mitigate risks, capitalize on the opportunity, and ensuring long-term success. In addition to the above, here are some specific examples how pestle factors can impact online payment apps. Let us consider political factors. A government could introduce a new regulation that requires online payment apps to implement additional security measures. This would increase the cost of online payment app providers, but it could also improve the security of the industry as a whole. So by understanding the pestle factors that could impact the business, online payment app providers can make more informed decisions about how to allocate their resources, develop new products and services, and expand into the market. Can we move on to the next slide, please?
Yeah. So talking about the profitability of the online payment applications. So let's first understand how do the online payment applications generate revenue. It is by applying or taking the transaction fees on as well as with the integration and partnership with the other communities such as e-commerce and other applications on the online payment applications. So by transaction fees, they charge a minimum amount to either to the banks or to the users, and they generate revenue since since a huge amount of people are using these applications. So even a small transaction fee charge would result in higher revenue. Apart from that, the integration and partnership with the other applications such as booking movie tickets or booking bus tickets or even flight tickets, they integrate with the other vendors and with the e-commerce vendors as well, so that they can charge transaction fees and they can generate revenue. Now, talking about going further, the online payment app industry is a global app industry with a large and growing market. The industry is expected to generate about 2.6 trillion revenue in 2023 itself, and this is expected to reach about 4.2 trillion by 2027. Now, the profitability of the online payment app industry varies depending on the region. In developed markets such as United States and Europe, the industry is highly competitive and margins are relatively thin. However, in the emerging markets such as India and China, the industry is growing rapidly and the margins are higher. As we can see from the table in the presentation, the profitability in United States is around 10 to 15%, in Europe is 5 to 10%, in China is 20 to 25%, and in India it is around 25 to 30%. Now, speaking about the trends in the industry, the profitability of an online payment app industry is expected to improve in the coming year as the industry grows and matures. This is due to the number of factors, including the growing population and the government initiatives for the online transaction, the increasing adoption of digital payment worldwide, the growing demand for online payment app services from the global middle class, and the increasing competition among online payment apps providers, which is leading to the innovation and lower cost. Now coming to the graphs here, we can see how the transactions, number of transactions, digital payment transactions has evolved from 2018 to 2022 in India. Starting in 2018, it was 14.59 billions, and in 2022, it was 71.95 billions. And talking about a shorter period of time, we can see from November 2021 to April 2022, how the number of transactions, the volume of transaction has increased from 4.19 million to 5.58 million.
GPay. GPay is an online digital platform that was launched by Google in 2018. It is currently available in 60 countries. It's the most popular UPI payments app, which allows users to make payments online instantly. It has made it very convenient for people, both online and offline, and in person as well. Now, the features of Google Pay are that one-tap payments. It allows contactless payment technology that allows users to make payments from a single tap of their phone. Peer-to-peer payments. Now, GPay allows users to receive and send money to other GPay users instantly, making it very convenient for them. Bills and payments. GPay is compatible with almost all forms of payment services, allowing payments of services like electricity, water, phones, etc., right from the tap of their cell phones. Now, coming to the SWOT analysis, the first point is strong brand recognition and reputation. Google is a well-known brand which gives the users a lot of advantage as they have a lot of trust in the brand. Coming to the next point, it offers a wide range of features and services. Global reach, as I already mentioned, GPay is currently present in 60 countries and it is already expanding, so it has a lot of reach. It uses a lot of innovative technology. It uses the Google's ecosystem that makes it convenient and compatible with a lot of. It's compatible with Android as well as iOS, making it very convenient for the users. Google already has a large user base. It already has access to a lot of users and their insights, making it convenient for them. Coming to the weaknesses, there's a lot of reliance on the Google's ecosystem. If there was a bug or if the system of Google was to crash, it would definitely impact GPay. It would prove like a huge problem for them. Also, coming to any online payment system, there's always concerns about data privacy that need to be addressed. That's one of the weaknesses that needs to be addressed. Competition from other digital payment providers. There's a lot of competition in this industry, like there's PhonePe, Paytm. There's a lot of competition. That is why Google needs to keep updating themselves. GPay needs to keep updating themselves to stay relevant in the market. Coming to the opportunities, there's like in today's world, there's a lot of growth in the digital payment market. New technology, new like innovations could be used to make changes and to tap the untapped market, which there's a lot of market which is still relatively untapped. Therefore, there's a lot of areas that you can expand into the new markets as well. Of course, there's development of new features that GPay needs to keep innovating and advancing themselves to make them stay relevant in the market. Partnership with financial institutions and merchant banks. What GPay can do is come up with personal loan techniques, and it can make itself like a differentiated. It can use differentiation strategy to make itself into a unique digital payment infrastructure that is different from all the competitors. Coming to the threat, as was already mentioned by one of my teammates, regulatory challenges. There's a lot of in this industry. There's a lot of challenges that could come up. Like for example, government regulations could come up, which could require GPay, which could impact the operations and increase the compliance cost. So that is something that the industry needs to be prepared for. There's also always there's a lot of competition. There are a lot of new entrants in the market that could pose a threat to GPay's market share. And economic downturn is a very big thing. Digital payments depend a lot on the situation of an economy. For example, if there was a recession, then the digital payment infrastructure could be impacted by this. When we talk about SWOT, we need to come up with a goal. So the main goal for GPay at this point is to increase the volume of their transactions, volume as well as value, and to ensure global expansion. Even though they're already present in 60 countries, as I already mentioned, the market size is huge, but it is still relatively untapped, which is why they need to come up with strategies for global expansion. Coming up to the strategy that GPay uses, Google Pay is known for differentiation strategy. It aims to distinguish itself from their competitors by offering unique features and user experiences. Overall, they want to provide a rich, convenient, and secure digital payment experience for their consumers. Now, they have as I already mentioned, integration with the Google ecosystem. It makes it easier for GPay to leverage the integration with other Google services like Google Maps, Gmail, Google Assistant, etc., allowing them users to make seamless payments and transactions. Contactless payments, as I already mentioned, they can make payments from their phone, but what they also use is NFC or near field communication technology that allows them to make secure payments. Nowadays, you can even make payments from your smartphone if they are equipped with NFC technology. Now, peer-to-peer payments. Now, P2P was a very significant part of GPay's differentiation strategy. It allows them to send money to users and families with ease. This was one of the main points which they used to differentiate themselves. Now, rewards and cashbacks. Whenever you make a payment using GPay, it offers cashbacks, discounts, payments, etc., which increases customer experience and ensures that the retention is also being increased. Now, coming to merchant partnership, GPay has partnership with wide range of merchants, both online, offline. This allows for exclusive discounts and deals. It creates a value added proposition for the customers. Now, coming to financial services, GPay has come into financial services like digital wallets, payment plans, etc., and access to personal loans, which it is basically offering fintech solutions, trying to differentiate itself from other digital wallets. Security and privacy. Now, security is the topmost priority for GPay as well as other UPI apps. So, using encryption and authentication, it is trying to ensure that the data of the customers is secure and it's a trusted platform. Now, data utilization. GPay has access to a lot of payment data, which allows them for targeted advertisement and experiences, thereby trying to potentially increasing their own revenue. Now, the last point is cross-platform functionality. Now, GPay has access to, as I already mentioned, GPay already has access to both Android and iOS services, making it compatible with both, and thereby attracting a broad user base.
Coming to Paytm, a brief overview of the company would be that it was founded in 2010 as a fintech company, and 2014, by the time it was 2014, it became one of the most popular wallet providers in India.
it basically works in two different ways. The wallet ecosystem is still existing, even though it is going down in trends, and they have also established a payments bank because of the license that they got from RBI. And coming to the SWOT analysis of Paytm, one of the biggest strengths that it has is that it was a market leader, which who offers a lot of services, including bill payments, recharges, the very popular UPI system. The weaknesses include its reliance on third-party infrastructure because it doesn't have its own infrastructure, and some certain customer service issues that it has faced in the past. The opportunities that can be seen through Paytm would be that the current growing trend in India as well as in the world for digital payments is a big opportunity for Paytm, while it also continues to innovate and give new products and new service offerings. Some of the threats that it faces are the general regular ones, like very stiff competition and the the economic slowdown that is faced by the West, which we might feel some effects very soon. Can we go to the next slide, please? So the strategies used by Paytm is a very interesting concept because Paytm doesn't exactly rely on only one strategy. It uses a combination of cost leadership as well as differentiation. Cost leadership would be to preserve the market leadership that it already had, and it focuses on affordability as well as easy accessibility to its product. And other than also charging low prices by lowering production costs and maximizing the supply chain, it also offers discounts and coupons to achieve sales targets and handle the competitive pressure by its closest rivals, PhonePe and GPay. The differentiation strategy that Paytm uses is that it innovates and allows its user to access a wide variety of services, which also include the payment bank that it has established, the ability to recharge, the ability to pay bills, the ability to book movie tickets, and a lot more. It is the oldest brand and the strongest presence in the domestic market, and it has a strong foothold in the industry, which makes it very easier for it to differentiate and also make sure that it stays as a leader. Can we go to the next slide, please? Here is a comparative analysis of GPay versus Paytm. I won't go into the similarities of it because this is what every single payment app nowadays offers, but I'll just give you a brief overview of what the differences are. There's a lot of quantity differences. For example, the Paytm has a much larger user base than Google Pay in India. The reputation is essentially the same on both sides because most people have accounts on both of these apps. While Paytm offers a lot more offerings than Google Pay because one of the major reasons is because it has the backing of RBI as it is a payment bank, and both of them focus on a lot of innovation, and they are trying to break through and cut each other's throats in the competition, as well as their focus is mostly on also much differentiated in terms of that Google Pay will try to have a global focus while Paytm will focus on the Indian domestic market itself. Thank you.